Hey, what's going on? Today we're going to introduce you to Brenda Chen from Conventus, and she's the head of sales there. If you haven't heard of what Conventus is, it is a hard money lending company, and she's also the founder of SF Bay Real Estate Club and Venus Rising. So, welcome, Brenda. Let's talk about everything going on with you.
Hey Matt, hey everyone. Thanks for having me and really excited to be here.
Welcome. I'm glad to have you on the show. I've been meaning to talk to you for quite a bit of time, and
hmm
I've seen that a lot of our friends are, definitely using you for their properties, their flips, their development projects, and I want to talk to you more about learning more about what you're doing and what Conventus is all about.
Yeah, let's get started.
Yeah. So what have you been doing actually? So you mentioned before, just in our previous chats, that you've been a hard money lender for 3 years.
Yeah, exactly. So I've been at Conventus since July 11th, 2017, so 3 years ago to this day.
Congrats.
Yeah, thank you. And it's been really fun. Before that, I had no knowledge about real estate, so I learned everything through this job and this company. So it's been really awesome.
So what made you decide to get into real estate and to get into hard money lending?
That's a great question. I kind of just fell into it on accident and I just got very lucky because it's something that I really love. And before that, I was pre med and working in a hospital and looking for something different to pivot to. And back then, I was just trying new things out and got recruited really early. I was like employee number 7 or something. And just really fell in love with it because I think the people at the company, the people that we work with, our clients are very special and that they don't like the typical lifestyle. They are striving for something more, for financial freedom, for investing, to building their wealth and their legacy. And so I think it's just this really awesome group of people, and this community is really tight knit. That's how we met as well, through a real estate group. And I think the community is totally next level. So I just fell into it, I was really hungry back then, just like going to a bunch of events, trying to learn as much as I can. And then through that, just the more I learned, the more I became interested. So that's how I got here today.
It's funny, a lot of actually like a lot of pre-med, a lot of medical dentistry people, they all jump into real estate. Like, why is that? Like, what makes you want to go
Yeah,
into real estate if you're
interesting.
doing really well as a pre-med?
Yeah, that's well, I think I realized that pre-med wasn't for me. Like I love helping people and I thought I wanted to do that through medicine, but I realized that I was always reading business books on the side, like self development and all that kind of stuff. And I think real estate, because it can be challenging, a lot of the people in real estate are also really into self-development. So that I think I just felt at home with this group of people. And so I didn't think medicine was necessarily for me, but I do think there's something in common in that, we're all striving for something with, big with our lives. Like medicine, it can be very challenging, and real estate as well. So I think that might be the commonality there.
I think so too, and I just like talking earlier. It reminds me too, like how our team is built as well. Like we have doctors, we have dentists, we have
Mm.
nurses in our team,
Mhm.
MBAs, and it's funny. I think the commonality is that we're all like really people who always want to learn, constantly striving for more and better. And I think one way real estate and investing is a way to serve people. It's a way to serve people differently in a financial freedom model, but at the same time, its ability to scale and help people grow, and
Mhm.
that ability to help many people at the same time, it can be really rewarding financially and just beneficially to help everyone grow their real estate portfolio, their wealth, their family's wealth, and just create a different kind of level of success.
Yeah, absolutely. I totally agree. I think, yeah, another thing that I just thought of with medicine and real estate is that it seems like it's a calling for people. Like it's not a job. Like real estate, you're on all the time. Like my all my free time is on learning real estate and meeting people in real estate, and then I have my job that's in real estate. And I think it's the same case in the hospital too. Like you're never really off. So it's really something you devote your life to.
So like you're living and breathing real estate, and I'm sure your breakfast, lunch, and dinners is all around real estate, right?
Yeah, yeah, I love it.
It is. I think even from in my life, like our family dinners, even when we're a lot younger in our early 18, 20s, and 30s, we're always sitting at dinner talking about real estate. Like the dinner
Hmm.
table conversations is just about real estate. It's like everything you can do about real estate, all the different investment strategies, goals, what's going on in the market. It's like, why are we
Yeah,
talking about this? This is our dinner conversation,
it's
right?
fun.
It's fun, and you
Yeah.
you, you realize that like even our kids right now, like our kids are like 4 years old and 6 months old, 7 months old today, and we're talking about real estate in on the table. They're hearing it, so it's kind of funny to go about that. And then
Hmm.
after that, you decided to go into real estate, and you went to hard money lending. Can you tell us more about, because most people out there, I think in commonality is that most people out there don't know exactly what hard money is, where they have misconception of what hard money does and how it helps you. Can you tell us kind of like more about what it is?
Yeah, absolutely. And I had no idea what it was either before I joined. And I think it's great that it exists. So basically, it's an asset-based loan. So it's private lending in a sense, and that it's not a conventional loan, but you can use that for your business purpose properties or investment properties. So it's just a quicker way to get personalized financing. So instead of having to jump through a lot of hoops to get a bank loan, you would get it faster. And of course, there's a premium for that. And so we serve the investor that just needs to close quickly in order to be competitive. And then we help them with value add like construction, renovation, and all that so that they can stabilize properties and then eventually sell or refinance. So we're kind of that bridge option between purchasing and then refinancing into a bank loan or just selling for a profit.
Okay, so let's break that down a little bit more.
Yeah.
So for example, private money, private lenders, and private money is basically when you have a client, your investor group, your pool of funds, you use their money. They're not conventional money. They're not. It's not from a lender like a normal residential lender, commercial lender. It's not from a big bank, but it's more from private money, private corporations who are funding these deals. But at the same time, they're charging a premium for that, and these clients are using that money to either buy real estate, flip properties, develop, or other methods of real estate. Is that what it is?
Yeah, exactly. So our loans are based on the asset itself. So we have fewer requirements. We still have requirements, but they're not as strict. And then it's all about speed in real estate sometimes. And so we're able to close in like 5 to 10 business days on average. And then sometimes it takes banks like 30 days or something. And so we just, yeah, some people can pay us off really quickly and then refinance or just sell for a profit if it's a short project.
Okay. So, for example, when you say asset based program, and you're referring to the property itself, whether it's residential
Mm-hmm.
or commercial, you're using
Mm-hmm.
that asset to kind of calculate and fund a deal. If the deal makes sense to you guys, then you guys will fund the loan for them. And normally, people would use a hard money lender when they can't get a normal traditional loan, or they need a certain time period or a bridge in between a regular loan, right?
Yeah, exactly. So I know banks ask for tax returns, and we don't need that because, like you said, we're asset based. So we look at the value itself, and then we make the loan amount based on that. Of course, we look at everything holistically. And for example, we like to see experience, but but that's not always the case. Like we're much more flexible, and so there are a lot of different factors into each loan, and we can mitigate our risk based on factors like reserves or income or the loan amount. And so we'll just pulling different levers to make it work. Whereas sometimes at a traditional lender, you might have to stick to this box, and you can't. If you don't fit in the box, then you don't get it. But whereas we can kind of change things about the loan to make it easy for you.
Okay, so yeah, we'll keep going through these and walk through step by step, so that way we can get a full understanding. Because even for me or for other agents and clients, the misconception of how a hard money lender works and when they should use a hard money lender, we'll go through all those steps. So, for
Okay.
example, you said when you're looking to, like, a person's looking to buy a property, and for example, they might be self-employed, they might not have enough down payment, or they might need to close in 5 to 10 days, you said. In that case, they might say, okay, well, a normal traditional lender is not going to be able to close in 5 to 10 days. I just found this great deal. Let's say, for example, the house was 800K and the real value is $1 million, but you somehow found the seller who's desperately needing to sell. Then kind of the purpose of a hard money loan at that time period for this specific scenario would be they want to
Hmm.
jump in. They would call you and say, "Hey, could we make this deal work? I know this property is worth $1 million, but I'm actually getting a steal right now for
Yeah.
800K,
Yeah.
being what it is, and but I need to close in 5 days, and then you guys would make that happen, right?"
Yeah, and the more deals we do with our clients, the faster it gets because we have a lot of their information already. So yeah, we're a lot faster, and we can provide things that banks can't too, like construction funds. Um, we can do interest reserves. There we can cross collateralize properties, so you can use more than one property for a project. So, for example, if you want to buy a property but you don't have the down payment, but you have a lot of equity in your rental property or something, you can, if you own that free and clear, you can use that cash out to pay for the down payment, and then we'll also give you a purchase loan on your the new property that you're buying. So then you're kind of getting 100% financing through using more than one piece of real estate. So little things like that that we can be creative with.
Nice. That's a really good option for people. Basically, that's like a bridge loan. Then you would call it a bridge loan, where you're helping
Mm-hmm.
someone who already has a existing property, but they might need a little more extra funds. They want to buy that next house, investment, whatever, and then use their current property as a asset, to leverage it to buy the next property, and then you guys are funding that deal when a normal traditional lender might not do that deal because of their debt to income ratios being a little higher than it should be to buy that house. And then after they get the house and let's say they rent it out, then they might be able to refinance it to a normal traditional loan again so that they can bridge the
Mm-hmm.
gap.
Yeah, exactly. And sometimes banks won't lend on fixers, and we a lot of investors do want to have or do want to buy fixers because that's how they can value add and then sell for profit. And so, if you fix it up to get a bank loan, then there's not much space for you to add value and then sell for a profit. So that's where we can come into is, we've lent, we don't do this super often, but there are properties that have been fire damaged or, really, really in bad shape. But then the investors are able to use our loan to acquire it quickly and then turn it around really fast.
So that's a good example. So if you were to look at a house and let's say it's a great location and everything, but it had fire damage, normally a traditional lender would not be able to fund that loan because of just the liability itself. Being a fire damaged house, you have to make sure you get it all cleaned up, mitigate all the risk, put it back to normal, and
Yeah, exactly.
that risk factor is like most lenders will like, I can't do that, right? They're not going to take the liability. So
Mm-hmm.
then that's a good example where a hard money lender says, I will, right? And you'll take it in, you'll calculate everything, make the assessment, and the person who buys the house will say, okay, based on that number, here's my goal of what I'm going to spend to fix it up. Here's my hard money loan. In the future, here's my value to sell it. And then I either sell it or I can refinance it once I'm done with everything, fixing everything with permits and all.
Yeah.
So that's a good way to use a hard money lender as well.
Yeah, exactly.
Okay, nice. That is nice to hear that basically you're giving a lot of different options when residential loans or commercial loans can't do the loan, right?
Yeah.
Alternative options.
Yeah, just giving people the chance to stabilize property so that they can rent it out or, hold it long term and use a traditional lender, give them the time that they need to get a conventional loan. Or sometimes they might not even want a loan afterwards. They just want to sell it as soon as possible. And so our loans don't have prepayment penalties for those types where you could just fix it up really fast and sell it in a month if you want to, whereas a lot of other lenders wouldn't allow that.
So how do people like start learning about hard money loans, and then how do they get into it? Because I know most people out there be like, oh, okay, I want to buy a house, I want to buy a fixer, I want to remodel, flip a house. But I always like people always look at the traditional route of residential lending. When do they start looking at hard money lending?
That's a great question. I think it's relatively new in the scheme of things. I know people have started talking more about it on places like Bigger Pockets, like podcasts like this one. We're starting to introduce it more in our real estate meetup. We're going to start having webinars for people, not just to learn about hard money itself, but all the different options that are out there. because we're just one option. And so we just, as a real estate investor, you want to pick the best, and there are pros and cons with each. So the more knowledgeable you are about all the different options, the more you can pick the one that's best suited for your project.
That's good to know too, because for example, like the misconception of hard money loans is that, hey, for example, it's really hard to find a hard money lender that you can know and trust and build a relationship with, because there's so many hard money lenders out there. You don't know which ones the good ones, which ones charge a lot of money, a lot of points, a lot of
Yeah.
back end fees, and especially when you're doing a flip or a good investment, you feel rushed. So
Yeah.
if you're going in rushed and you don't know who you're working with and you don't have any experience through talking to them, having webinars with them, learning about what they do, why they do it, how they do it, then you're going in kind of blindly and you're rushing your numbers. So then you don't want to make mistakes and overpaying for anything, and then coming out at the end of the deal and not making a good investment on the flip, right? Or a development project.
Yeah, totally. You want to find someone that has a partnership mindset with you, a lender that wants you to succeed, and doesn't want you to default. And so that's why we take time to evaluate your project, that it does make sense before we say yes to it, because we don't want you to go into it and then have it be like a huge rehab where you don't make any profit and then you might not be able to make your payments. That's like the worst case scenario for us. So we would say no to those projects. And we have in the past where the renovation budget just didn't make sense, according to our construction team. And we told the client that, and they decided to go with another lender. And then they found out that basically it was not feasible. And so I think yeah, we should definitely be really careful about that. You want to make sure who's actually on your side and who has the same kind of goals as you. And so our goals are for our clients to succeed. And then, we can mutually benefit from that.
That is a great way to look at it, and I've been hearing people talk about that before too, where they talked about hard money loans, they talked about the scenarios and the issues they ran into, and how different hard money lenders were different in terms of their goals and mindset of how to help clients. Some of them were actually, they would say, out for themselves to make the good money on the points and fees, but there are some really good hard money lenders which would actually look out for you and say, hey, based on what you told me on your project, that's actually not viable in our experience, and we've done a lot of deals just like this one, but your numbers don't pan out, and we want to just kind of give you a forewarning that, hey, that might not be a good investment. You might want to double check your calculations on your remodeling costs and everything. Our loans are great, but the numbers don't make sense for what you're trying to do with, in our opinion, right? So that
Yeah,
matters.
yeah, totally. I think when I was just getting started, I I was always on the client side. Like, of course, like the value is going to be there after they fix it up, like their estimated value, and then our credit teams would kind of do a reality check, like, okay, it's not really that high, and then I would kind of side with the clients before, but now I realize that it's good to be conservative, because of course it's great to get a great number, but if it's kind of a pie in the sky type thing, like you don't know if you're actually going to get there, you might lose out on a lot. So just being conservative, and I know lenders typically are because they need to protect themselves, but in the end, it also protects the client too, so they don't get in over their heads on, if the after repair value is way lower than what they expected, they could lose out on a lot that way.
Yeah, it makes sense, especially nowadays with everything going on and COVID going on. I think a lot of lenders, investors are tightening their funds. A lot of jumbo lenders out there tightening funds, and hard money, I'm assuming they're also tightening and being more cautious, because at the same time, it's not easy to flip in the market right now. And if you are, you have to be cautious about your numbers, because your timeline, you think it takes, for example, 2 months, 4 months, it might take six months or a year. You don't know, with permitting,
Mm-hmm.
everything closed down, supplies, materials, and workers, and the chances of people getting sick. Everything's being worked on a lot slower pace, so then your numbers can change drastically. So I think investors out there, and even flippers out there are kind of watching their numbers way more tightly, and kind of like putting themselves at a discount calculations to say, hey, just in case, we have extra room for if anything happens, even more than before, just to make sure that it pans out.
Yeah, and if someone is new, I would advise them to, yeah, talk to their lenders and talk to people like the real estate agents in the area, like people like you and other investors. The more people you talk to, the more perspectives you can get. And so I know recently someone talked to a bunch of realtors in Orinda, and was able to get more color on that specific property in that neighborhood, whereas they, I don't even know, like in that, and I mean, I tried to, our team didn't know about the specifics of that property, and we do this all day, every day. And so it's also important to talk to local people in the area so you know exactly which neighborhoods are best.
That helps a lot too, because if you think about it, you're actually building a team, especially as an investor, flipper, developer, that you're having extra set of eyes looking at everything
Mm-hmm.
in details, looking at the area, neighborhoods, the property itself, and your scope of work that you're planning to do. Just on top of the lending side of it, and just helping you lend your money, they're actually helping you look at things. So you're actually building another set of into your team. So if you
Mm-hmm.
can, people can learn to appreciate that. That actually is really beneficial if you have a strong team and strong lenders or in Harmony or residential who can look out for you. It makes it a lot easier to say, hey, actually, that's good numbers. I vetted it with my lenders, my Harmony guys, my contractors, my agents, and everyone agrees that our team agrees that that makes sense. So then they'll go for it, right? Rather than saying, hey, the Harmony lender is just doing a loan and they don't care, right? It just extra money for them. So that is
Yeah.
nice.
Yeah, I think we have a long-term vision. We want people to, people in real estate, they stay in this industry for a long time, so we're not just gonna, make extra on one deal and then forget the rest. Like it's about helping people succeed so that they can be in this game for decades to come.
So when you go to this too, so for example, let's say a new person is interested in flipping, young guy, girl is interested in flipping right now, and the first thing they do is call you. What do you tell them about Harmony loans?
That's a good question. I think I would try to understand their business plan and their vision, what type of project they're interested in, what type of markets they're interested in, and then why. And so if they're new, then it's for their benefit to be really careful. So to have enough reserves to cover all the costs associated. So not only are there hard costs like construction costs, and all that, but there are soft costs too, like taxes, like payments, all of that. And so just making sure that they have that covered and that they have someone that can help them, because it's very hard to do your first deal. So um, I think it'd be better if they have someone to go to that has done it before. And so just getting a sense of why they got interested in, like who's helping them, what the resources they have, and then what properties they are interested in. And so we evaluate the property itself to make sure the value is there, that they're buying it at a fair price, and then that their rehab budget or their construction budget makes sense, and that their resale value makes sense as well. So what's the value creation that they're doing to the project, and then what's the resale price that they are looking for based on the value that they've created.
Okay, so and let's say all that makes sense. So what would be the next steps too? Like after everything makes sense, kind of pens out, having conversation with you. This
Mm-hmm.
looks like a good deal. How do they get started with you, and what do they need to provide to you guys to get the ball rolling so they can actually acquire that property?
Yeah, we're really fast, so we just want the loan application. It's online, and then we collect the documents from our ops team does that, and then it takes around 5 to 10 business days to close for properties under 2 million right now, and then above that, it's probably takes longer, maybe like 2 to 3 weeks. Um, right now we're only doing like single family and multifamily projects. Before we used to do some mixed use and commercial, but it's always changing now, especially since COVID. So things are always evolving. So, but that's typically what we're doing now. And we just get the appraisal done, um, work with title and escrow to coordinate everything, and then close really fast.
How's the documentation compared to normal traditional loans? Like what do you guys ask for?
That's a good question. I don't think I'm supposed to go into all that
Okay.
actually.
So okay, we could skip that, but basically, I would say there's a difference between documentation between a hard money lender and a residential lender, and it's somewhat easier to go through a hard money lender if you have limited documentation to make it happen, right?
Yeah, exactly.
Okay.
So I think the biggest thing for people is tax returns.
Mm-hmm.
So we don't require tax returns.
Okay, that's a good one too. Because let's
Mhm.
say this: if you don't require tax returns, that means it makes it easier for self-employed, people who are starting new businesses, people who want to get into the industry, or people who have less income, but have good assets or
Yeah,
have a
exactly.
good asset property they're acquiring that makes sense. Then you're giving them an option for those who are not standard A paper people or standard A clients who have everything in the world to make it super easy and full docs. Then you're giving that option. Or for people who are heavily more leveraging than banks who are a little bit more conservative right now, then you have some additional options for them.
Yeah, yeah. From what I understand, banks are also getting more strict, and so, um, yeah, you're right in that. For example, if they have enough reserves and the loan to value is low enough, then it doesn't matter as much what their income is. If they're putting a bunch of their money into the down payment.
Okay.
Whereas for banks, they might want to see a steady stream of income for years or something. But I don't work at a bank, so I'm not sure about their requirements. But
Yeah.
things like that.
Okay, good to know. Yeah, I used to be a lender too, so I'm an
Oh, cool.
investor and lender before, so it
Awesome.
makes it a lot easier to understand the models of how different models work, why they're doing it
Hmm.
this way, and then which one to utilize for our clients in terms of investing in real estate. It helps a lot when you have that kind of background to understand. I haven't done hard money loans, so I actually want to see more about what you guys are doing and how that compares in general, right? But my gist of it is that when you have certain requirements to meet that are not traditionally acceptable by banks, then it's good to go your option, and especially for bridging loans too, because most lenders don't bridge loans without using a hard money in between to like buy a second property, right? Like trade up
Hmm.
to another property and keep your current existing property at the same time.
Hmm.
So that's
Yeah.
yeah. That is good to know that you can do that. And so then people out there would start, talking to you more about that, and you guys can close it within 5 to 10 days. That's pretty fast, and it's because you're not going through the same kind of policies that normal traditional lenders use, right?
Yeah, yeah, we're a lot faster. We don't ask for as many things, and we understand that time is of the essence for investors, especially when there are a lot of other competitors in the space. So we know that um, the timing can be the difference between winning a deal and not getting it, or them getting a discount because they can close fast. So we have had a lot of clients that were able to win deals not because their offers were the highest, but because they could close quickly.
Yeah, that's actually a good point to make because I think a lot of people in our heads, right? For example, oh, let me get the best rate, let me get the best terms on that rate because that'll save me money. But when you think about the different big picture, is that if you get a great rate but you don't get the deal it never mattered, right? The rate never
Yeah,
mattered. But
yeah,
if you find a great deal and the rate's a little bit higher, but when you calculate that rate into your good deal and you're making a lot of money, then the rate never mattered, right?
yeah, totally. And uh, a lot of our experienced clients, they could get bank loans all day, every day, but they don't because they know that time is more important to them. And sometimes they don't want to necessarily go through all the headaches of getting a traditional loan. They just want to get it fast and then do their rehab and then get out, and whereas they might have to wait a while longer for them to get a bank loan.
That is true too, and I think one thing to look at too for investors out there or even buyers out there is that when if you can calculate the loan and your risk assessment to buy that property, and if the financial numbers make sense better than a normal traditional loan, then it makes sense to do it and buy it. And then if afterwards you can always refinance it later to get a better rate, right? If you want to, or if you know you're just gonna do a quick flip, then you might not need to traditional route anyways. Or if the property doesn't even meet the requirements, or you don't meet the requirements, then that way is a great way to go. But a lot of
Mhm.
people out there might not look at it that way. They might like, oh, I'm paying a high rate, high points, whatever, and then not foresee and calculate in the future. Like, hey, that actually makes sense. I wish some of my clients before, even in the past, like years ago, like, hey, we should have done a hard money lending on that deal. The rate was a little bit higher, but if you calculated it, the timing made sense, the money made sense. You would have made a lot of money, but then they passed on it. Then you're like, oh, wasted opportunity because they didn't go the hard money route, right?
Yeah, yeah, totally. And sometimes it's like you said, they might not even be able to get any sort of financing. So it's not even about the rate. So sometimes the banks just won't lend on that property type or a property that needs to be fixed up. And so if they do want to do that project, then they can do it with us. Whereas if they only would go with a bank, then it wouldn't materialize for them. And so, yeah, we're able to make a lot more projects possible for people.
Yeah, I think there's also like a misconception of, in some cultures, a misconception of hard money loans and being scared about it and saying that's not the great way to go. You always have to go the 30-year fixed route. That's a traditional, standard. And,
Yeah.
and I'm like looking at it and thinking like, not really. You don't really have to do that at all. You just have to understand the different models, what makes sense to you, why a hard money loan, why a 30-year fix, why even a 7-1 arm makes sense to you. And if that calculates the best way for you, why not go that route, right?
Yeah, just running through your projects through different types of financing. So I know some people with us, they know exactly how much their holding costs are per month. And then so at some point, it wouldn't make sense to go with a hard money loan. For example, if your project's going to take 5 years, hard money is not for you because our payments are higher. And so it's like, what is that threshold that you think you can achieve? So if you think you can achieve your completion in 3 months, then hard money might make sense for you. But if you if it starts becoming more expensive at month like 8 or something, you might want to see if that's feasible for you to finish before month 8. And if not, then you might want to find a bank for it.
Yeah, so a good example, say, let's say you found a property that was fire damaged and you knew it only takes 3 months to, on average, let's say just to fix that small fire damage. Then you could say, well, I'll buy the house, I'll take the hard money loan, we'll use that 3 months to fix the house where I can actually qualify for a normal traditional loan, and then I'll refinance it to a traditional loan. Or I might hold it for 2 more months, finish the whole project, rent it out, and then do a real refinance, and maybe I'll build some equity and do a cash out, right? So
Mm-hmm.
those are options there. But if you go, oh, I don't want a hard money loan because I don't understand it, then you actually skip the property, you skip the profits, and then you don't get the loan. Period. Right.
Mm-hmm. Yeah.
So that's more of understanding. I think people out there, all of us out there, just need to educate ourselves on hard money loans, what it is, what it does, how to do it, and who to use and when to use it. And I'm sure like a lot of hard money lenders out there. Are they all the same or are they different?
We're different. So different lenders have different advantages based on the geography they do or the loan types they do. So we're going to be launching our long-term rental product soon. And so before that, we couldn't do those types, and so we had to refer out, or people had to wait. But things like that, we used to do more like commercial types, but now we're more focused on single family and multifamily. And yeah, I would just talk to different people and try to understand what is their bread and butter that they do. And so we're able to be really competitive on projects with construction, for example. And we understand that it's hard for investors. And so we have that investor mindset where we think, what is it going to be that would make it easier for them to get this loan and for them to work with us, instead of the other way around where they have to give us all these things or we're not going to fund their project, which is some of the mindset that other lenders might have. But yeah, we just want to make it easy for them, and we also want them to not take additional risks that they don't have to. Yeah, we work with them to interview them on their project to see if it makes sense, and then if it does, then we move forward, and we see ourselves more as a partner.
See yourself as a partner here, and that you're kind of going through everything with them, the motions to make sure the numbers make sense, and you're kind of guiding them on that part of it to move forward, right? And you said that there's different kinds of hard money lenders out there. There are different niches. There are probably different rates, different pricing, different specialties, and even different demographic areas, right?
Mm-hmm. Yeah.
So what areas do you guys focus in?
That's a great question. So most of our loans are in California and New York. And then after that, in areas like Washington, Hawaii, Florida, New Jersey, things like that. But right now, the majority of our loans are in California, but we're expanding elsewhere.
Okay, and majority is California. And you mentioned, single family homes, multi units, not mixed units, and not commercial. So why is that?
That's a good question. It's just because of how, yeah. Well, I don't
Is
know
it
if
the
I'm
risk? Just risk involved?
well, yeah. So Yeah, so basically, aren't as many buyers of commercial and mixed use properties, so that's one reason. Um, yeah.
Demand. Okay, so basically,
Mhm.
demand on the loan types is also a factor into what kind of loans you guys do. And right now, the majority is focusing on single families and multi units in the
Mhm.
residential space,
Mhm.
not necessarily commercial space. And specifically in mostly California, you mentioned a few other states, but right here is what you guys are doing, kind of your bread and butter.
Mhm. Yeah.
Nice. And how has it changed? The market changed for you guys in terms of 2020 shelter in place, COVID? Has it changed?
Yeah, that's a great question. So when COVID first happened, it was kind of frozen for a bit, like just trying to evaluate what's happening. I think not just us, but a lot of our clients too, because there are so many uncertainties. And there still are uncertainties, but I would say it's warming up a lot compared to before. So it seems like a lot of people are still doing deals.
Why do you think it's warming up now?
That's a great question. I don't know. Yeah, I need to look more into the trends and all that, but it seems like people, at least in the Bay Area, are still very active.
Okay, yeah, I think for example, for me in real estate, I think a lot of people are still active, and I think it has to do with just because there's a lot of there still is a lot of tech jobs. There's still a lot of money here. There's still a lot of equity here. The most important is the equity, and then there's still good stock values out there. There's a lot of people in different areas who don't have the same kind of opportunities. But with that being said, people are still feeling confident, and even though there is COVID, there's first wave, second wave, maybe some other different things going on. I think just the confidence level and being in these kind of locations makes it more comfortable with the risks involved. And if you are kind of forecasting, calculating, and saying, hey, I think even then with this in place, the tech is moving forward, artificial intelligence and just the economy and the way things are going, that those people who can afford it will keep moving on and take the risk to see if it actually goes up or down. But with the rates being super low right now, it's really really kind of advantageous to say, hey, okay, let's try, right, and see what happens.
Yeah, it seems like a lot of my realtor friends in the area say that a lot of their buyers are having trouble getting properties because the inventory is not there. And so, yeah, it seems like there's still a lot of demand for houses, especially single family houses.
Yeah, especially that too. Like I'm sure a lot of people who live in smaller homes, older homes, maybe homes with no backyards, they're like, I want to move now, and I can work anywhere, and I still love the Bay Area. I still love certain cities, and I just want to move. And then with the limited supply, there's a lot of demand still, and with the incomes they have, people here in the Bay Area make really high incomes, so they can afford it, and then they're still taking the opportunity, that risk, and saying, hopefully, both people don't lose their jobs. If they're a couple, then they can afford to buy it. And with us rates being so low, so many people are like taking purchase loans or even refinances right now to do that. And I think it's a good time to do that, and if you can find the right property, the right deal to make it happen. So I think that's why the demand is still there, and that's why the pricing is still pretty high. And certain homes which are overpriced or still expecting 2019 pricing might still sit on the market longer, but
Hmm.
homes are still moving.
Yeah, totally. Like you said, to just do their due diligence, and if it makes sense, then it could be a great opportunity.
Are people still doing a lot of flips right now?
I would say, yeah, we're still getting those requests. I'm not sure about how much compared to last year, but yeah, we're still getting requests for flips.
Okay, yeah, I think there are still some homes that are really outdated that have a really good opportunity and really good chances of equity. I'm sure they're taking a more conservative approach to it, but the
Hmm.
fact that there is still is opportunity, some people will take more of a risk than others. Some people have some contractors are doing their own flips, right? The contractors will buy it, get a hard money loan themselves, do all the work, and resell it, and with or without agents, and make some good
Hmm.
money on it.
Yeah.
And that is a great way to work with you guys to make that
Hmm.
happen, then, rather than a traditional route, right? Because even like a contractors are self-employed mostly, and they have money, they probably have good assets, but it's harder on paper to show it. And they have the experience background to do the flips, they have the calculations already, they just need the money to fund the project, right?
Yeah, yeah, totally. And sometimes finding a good contractor is the most challenging part, especially in the Bay Area when everyone's so busy.
Yeah.
Um, but yeah, I think people are really still into fixing up houses. And I would say there have been some delays that I've heard of in terms of like getting permits, but if they find projects where it's a short in and out cosmetic type project, then it could be a good opportunity.
It is, and yeah. Speaking of contractors too, like if you guys know any contractors, let us know because some of my contractor friends are like, I'm 1 to 2 years booked already, or some of them say, hey, sorry, I'm doing my own flips. I don't need you guys, right? I'm like, ouch, you're doing your own flips, and you don't need, you don't need any of us, right? I'm like, that's good for you
Yeah.
guys. Like, call me later when you're free. They're like the
Yeah.
superstars right now. They're the rock stars, right?
Yeah. Some of my clients became contractors for that reason.
That's a good reason to become a
Yeah.
contractor when you can do your own projects and you can calculate everything yourself and make some good
Hmm.
money on it.
Yeah,
And
exactly.
there's a lot of great investors, a lot of great agents and people, contractors who are doing their own flips right now and making good money. And some of them are posting on social media. There's some great flippers out there. And even if it's a harder time, they're having fun doing it. And hopefully they come out strong at the end of it and not take too much risk involved. And the permitting time is a little bit tricky because I even know some friends who said, hey, they bought a house as a light cosmetic fixer, but they did get some permits, and the permits took 6 months to a year right now.
Oh
They go,
my
oh,
gosh.
sorry, one is architect's gone, busy, COVID. Then the building shut down, department shut down. Couldn't get permitting for a long time, and once it came back up, they're all backlogged. And they're like,
Yeah.
yeah, I just bought this house, but now I'm sitting here for over 6 months, and I can't even move into it. I'm like, you know, like
Yeah, it's
ouch.
good to do that research up front so you don't get stuck into something like that.
Yeah, and they didn't even imagine this would happen, right? Like they bought it before COVID,
Oh,
and
oh,
then
I
they
see.
started the project, and then COVID hit, and everything shut down, and the contractor said, "Bye, I
Oh
call you
no.
afterwards," and they're stuck in a house that they can't really live in.
Oh
So
wow.
that is something that most people would not foresee anytime soon. So hopefully, even then, that you calculated a good amount of the work. Hopefully, you can do it yourself too. A great experience to learn how to remodel your own houses with permits, of course.
Hmm. Hmm.
It's a fun time. I actually did a lot of work before too for projects, and it's a lot of fun. It's hard. It's hard labor, but it's good. It's good experience to do those kind of remodeling flips and projects.
Did you fix your own house or
So I
is
fixed
it flip?
houses before. Yeah, like I
Oh, cool.
tore up bathrooms, tore up kitchens, put Cat 6 internets on houses, did all the wiring stuff like that.
Oh, wow.
And it's hard work. It's and you're dirty and it's tiring and it's back aching and painting the whole thing and doing it. It's not fun, but it's a good experience. And by learning how to do it, you have a better understanding, a better appreciation, a better calculation of time and money. So you can
Hmm.
actually make better judgments on what to do, when to do it, and is it worth doing it, and
Hmm.
see if they're actually doing it the right way. So that's a lot of fun to experience that kind of mindset and to do it. And especially nowadays, a lot of people are like house hacking right now.
Hmm.
So I think house hacking is kind of a fun way to get into real estate, a way to learn your numbers, to be able to live in a house and have other people to help pay for that. I think
Hmm.
a lot of people out there are doing really great events talking about house hacking
Hmm.
and finding ways to run those analysis to say, hey, based on that, I can stop renting, I can actually buy a house, I can have people live there, make some good money on it, and start improving the houses while I'm living there. Hopefully your roommates don't mind when you're doing that, but doing that and coming out at the end of it and like learning a lot, and even starting when you're super young to do that, right?
Yeah, absolutely. I think, your rent sometimes is the number one expense that you have, and if you're able to offset that with roommates, and that's great.
Yeah, I remember one of my clients. He asked me, "Oh, he was making good money already." But I was like, "You want to buy a single family house? Why don't you do this with your qualifications? Why don't you go buy a 4 unit? You live in 1 unit, and then you rent out the other 3 units." And I already penned it out for him, and the numbers made more sense, and he was actually paying less than a single family house. He's like, "What a great idea! I never thought of that." And then he took it, and the house, he lived in it. It paid for itself pretty much. He paid like
Oh,
dirt
wow, that's
cheap
awesome.
rent, and
Yeah.
in the last last 7 years or so, it went up over $1 million equity. Probably $1.5 million equity.
Wow.
He's like, wow, what a great deal. Basically, double my money. I lived here for free, and I had a 4 unit. And he had 1,700 square feet on top floor.
That's
So
awesome.
it's like, okay, perfect. That's exactly how you do it, right? You learn how to calculate your numbers. You learn how to assess your risk and make good judgment on being somewhere you want to live in. And if you went
Yeah.
further and house hacked it further, then you can do even more, right?
Yeah. I'm curious, what city was that in?
San Francisco.
Oh, wow. That's
So
amazing.
yeah, during that 2008, 2009 time when no one was buying, I was actually helping a lot of my clients and myself buy multi-unit buildings, and
Hmm.
we're running analysis and telling our people to buy good deals, and we're basically winning the bids because no one else was buying. Everyone was stopped buying real estate, And then even some of our investors, they didn't buy it. They were like, it can drop more. I'm like, not really. How much more can you go down? You're basically going down to nothing, and you still want more. And those guys lost out on a good opportunity. The
Mm,
ones who bought made a lot of money, and they had a lot
mm.
of fun doing it, and they took the risk, but they knew that they can afford it, and it panned out for them really quickly. Like we didn't know how fast it would turn back up, and it turned up a lot. So that
Yeah.
was when I was 20. Yeah, when I was 25, I bought my first house in San Francisco when I was 25.
Oh, wow.
So that was a lot of fun. Bought it, remodeled it, rented it out, got it all going and made good money on it. And later you just keep saving, right? And you can house hack, you can live, you can keep growing your equity and keep investing. Because one thing, like you just said, renting can be really expensive. So it's better to quickly figure out how to get rid of that rent payment.
Hmm. Yeah,
Yes.
absolutely. Yeah.
Speaking of that too, you founded a SF Bay Real Estate Club. What is that about?
Yeah, sure. So I founded that with my friend Alice Carcevar 2 years ago.
Nice.
And it was because I was hosting events for what was NSF Girl Bosses, and I met her there. And it was all about self-development and just workshops, learning. And we were both in real estate, and we were attending meetups in like San Jose, like Mountain View, like pretty far. And we just decided, why don't we just make one here and locally and have the people come to us. And so it's just a really great way to network and meet people. And so I would say, yeah, I've gotten so many new friends from that, like referrals, like people in the industry that I wouldn't have met if I didn't host. And yeah, so it's been really great just having different workshops on different investing strategies, and then happy hours and yeah, events all over the Bay Area.
Yeah, it looks like you have pretty good turnouts. Actually, seen your club like 2 years ago. I actually went to one of your events and
Yeah.
saw a lot of great people there. And I think the mindset is that you're attracting a lot of people who are interested in real estate, learning about investing, learning the next steps. And I think a meetup is a great way to start, for them to get to know people, get to know you guys, and get to meet others who are having the same mindset. And I think it becomes a lot of fun. You actually build a lot of friends, a lot of relationships out there really quickly. And you
Hmm.
can see the different mindsets and how people are doing. I'm sure a lot of people are listening to bigger podcasts. A lot of people are listening to different podcasts, talking about real estate investing. And by having these, events, you're able to provide a lot of value, educate them, and share. And just like you said, like happy hours and everything else, it becomes part of their lifestyle.
Yeah, exactly. And you start seeing the same people in different places. I kept seeing you everywhere, and so yeah, I think it's really a sense of community and belonging, and everyone helping each other. And to your point from earlier, sometimes it's hard to see whether someone is a good referral or not. But if you hear of them multiple times, then you kind of know. So it's a great way to meet quality people within real estate.
Yeah, I think that is a great way because, like you said, you're building that trust right there. Right there, you're hosting all these events. People are seeing you over and over again, and they're getting to hear what you guys are doing, what you guys are saying, and how you're helping other investors out there, and they're sharing that with each other. And then you become a great resource for them to say, "Hey, actually, I'm ready to invest. I'm ready to flip. I'm ready to buy real estate for themselves." And it's a great opportunity to grow and make new relationships, especially with people in the Bay Area. A lot of people in the Bay Area are always attending these kinds of events, so it's nice to see you guys out there doing that. And you guys been doing that for quite a few years already.
Hmm.
And yeah, it's nice to see. I remember going to your event and it was pretty good. It's like seeing everyone talking like, okay, I never thought about it that way. Is a different way of thinking and different styles, different types of property, different opportunities.
Hmm.
And yeah, I think a lot of our mutual friends are kind of doing the same and working with each other to, build up our empires, right?
Yeah, totally. And I'm really glad you enjoyed it. And I think the more knowledgeable we can get, the more we can help others. And yeah, people in real estate, they're in it for the long haul. And so we all try to help each other out. So all the meetup people know each other, like the different meetup leaders. Like when people are having a conference, we all post events for them and things like that to get attendees. And I think it's a great way to not only learn about real estate, but to make friends too.
What's your next meetup? I think I see online, you talked about SF Real Estate Investors and Entrepreneurs Happy Hour. So
Mhm.
what do you guys do there?
That's a great question. So, because of COVID, we had to switch to virtual events now. And so it's just an online event where we come and share what we're up to. It can be kind of strange now because we're not, going to these big events anymore. In real estate, it's a people's business, and so this is a way for us to kind of still keep each other updated and to still, still be there for each other during quarantine.
Yeah, I think we'll be in quarantine for quite a while. To be honest, I don't think it's gonna
Yeah,
change. I think it's just getting worse. To be honest, just looking at numbers, but
yeah.
hopefully it gets better by 2021. I think. Yeah.
Yeah, it's a different way to do events. We used to do these happy hours at bars where it's really hard to hear people, and you maybe talk to five people the whole night. But at these virtual events, because you can hear each other really clearly and only one person speaks at a time, you can actually get to know a lot of people in a short amount of time.
That is good. That's a great way. You actually need to attend more online virtual events and just get to meet more people, speak, and just help each other engage on different topics.
Hmm.
That's a great way. It's a lot faster and it's different because you're not physically there, but at the same time you
Hmm.
can learn and meet many more people really quickly, and it makes it easier for people across the world to attend your event. So
Yeah, totally.
that's kind of a nice thing too, because you're getting demographics where normally in a local event you're getting all local Bay Area people, but in a global event you can get anyone around the world and they can share their experiences from anywhere they are in the world.
Yeah, at one of her happy hours, there was someone from Georgia there. And normally there would be no way for her to travel all the way here just for a meetup, but she could just hop on her computer and then we can all hear about her experience. And so, yeah, we're able to access a lot of people. And then also for local people not to have to sit through traffic to get to the events, because I remember it used to take me like an hour and a half to get to San Jose or something to attend a meetup. So now we just hop on and then it's just an hour.
See, that's way better, honestly. I think a lot of people, a lot of agents out there, a lot of investors out there, are actually just doing that more often now because they find out that this is so much easier, so much faster. It's a great way to communicate. We can actually hear each other way more. We can speak a lot to a lot more, engage a lot more people, and it's a good learning and networking opportunity that I think even after COVID they would keep it and keep
Hmm.
doing it more often. And I find that to be really valuable. And it's just a different mindset, different change of pace and how people do things.
Hmm.
So it's a lot of fun that way too. You mentioned too, you're a founder of Venus Rising. What's Venus Rising?
Yeah, so I started that around 3 years ago when I first moved to San Francisco or moved back to San Francisco after being in SoCal for a while. And I wanted to just meet people with similar interests. And so I decided to start this group. And in the beginning, it was more socials like brunches and picnics and parties. And then it turned into more self development because I wanted to grow myself and then wanted to see what it's like to grow my career as well and want to hear other people's experiences. So it was just a way for people to come together and empower themselves and empower others through different types of modalities. So we've had retreats before COVID where we would go out and rent out a big house and then do some yoga, meditation, have like a chef, and we had different workshops like how to be healthy and how to be confident and how to go after our goals. And then so that kind of sparked the real estate group afterwards, but it just kind of made me realize how much community means to me, and it totally expanded my network and my understanding of what's possible, because before I was always hanging out with the same people every week doing the same things, but with meetups you can have people from all over the world come in. There's some people that come, I made this one friend from Mexico that just came in for a brunch, and then now we're friends and she lives in Tulum right now. And so just people like that I wouldn't never have access to before when I was just in my little circle. Now I'm opening up myself and opening up other people's networks so that we can experience more together.
I think that's a great way to put it, especially like you're doing all these different things, but at the same time, you think about it, it's basically like real estate and lifestyle. So being able
Yeah.
to converge, two different things into your life and have a lot of fun doing it, because a lot of people who enjoy real estate enjoy that kind of lifestyle. They want to, work out, be healthy, have a good mindset, do yoga,
Hmm.
and build and are passionate about things. So taking that into account, they're able to, nowadays a lot of people are able to do so many things and they want to enjoy so many ways, and to build a network and kind of correlate and tie everything together, it makes sense. And even for us, like, we're doing real estate, we're doing tech, we're doing sales and marketing, we're putting everything together, we're doing
Hmm.
events, podcasting, all these different things, but at the same time they all kind of work together, and it makes it so much more fun when we talk about it. Because, like, for example, this is a real estate investing podcast show. You're talking about real estate investing, syndication, area, San Francisco Bay Area, talking about lifestyles, and you're having fun doing it. But in this end of it, it's all about growing.
Yeah, absolutely. And there's so many ways to grow, and I think I really like that I'm doing both Venus Rising and the real estate group, because I think there are so many things that we can take from other disciplines within real estate. And in the end, like you said, we're all trying to grow. And it's interesting to see, for example, what a physician does in growing herself, and use that to grow real estate. And yeah, a lot of the principles are the same. And in the end, it is about a lifestyle that caters to our mission and our purpose. And through business and real estate, and cultivating a holistic type of lifestyle that works best for ourselves.
Yeah, I think that totally makes sense, and that's a great way to put it. And to wrap things up, I think there's going to be a lot more to go in the future too. Like, we're all so young, and we all have so much time to keep growing. And the fact is that, by being out there, by doing social media marketing, videos, podcasting, events, that we're putting ourselves out there, and we're,
Hmm.
trying to engage and speak with a lot of different people, and just hopefully, just show how passionate we are about real estate and investing in our lifestyles, that we want to attract a lot of great people who are like-minded and grow together and have fun. And I see you having a lot of fun with a lot of top agents in our areas, and you're doing a lot of deals with them, and I can see them working with you so many times over, doing their fix and flip projects, doing their house hacking, and continually growing together. And I look forward to having, like, our team and others, use you to with the hard money loans, and to learn from you on how to do it, and have you as part of their team, right?
Yeah, absolutely. And I really admire what you do as well, and you putting yourself out there. And I can sense the passion and, your expertise. And yeah, like you said, it is a long-term type of partnership. And I think it's just really great that this community is so open, and yeah, just so fun to work with. And so it just really makes my job enjoyable.
That's the great way to do it, because especially when you have great people to work with, it makes it just so much easier. It doesn't not a job anymore. It's just more like fun. Okay,
Yeah.
let's go invest. Let's go find you the next property. Let's calculate it. Hey, actually, that's a good deal. Let's go buy that and make it happen,
Yeah.
right?
Yeah.
So, what's the best way for people to reach out to you?
Yeah, they can find me on my website, which has everything. So it's www.brendatchen.com. And then my email is there, brenda@cvlending.com. And so you can find me on social media as well. You can just search Brenda Chen, and hope to see you on these platforms.
Perfect. So what we'll do is, make sure we're gonna see you again, and hopefully see you soon at a physical event. But for now, we're gonna see you online more often than not, and just keep learning more about real estate investing and what's going on in the market, and see you at your SF Bay Real Estate Club. And then for everyone else out there, check us out, check Brenda out, and make sure you join her events, join our events, and then check us out of our interviews, mastermind events, and more at matthewma.com. And we'll see you guys in the next one.
See you guys. Thank
Bye.
you.